Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so the Brian Niccol era at Starbucks getting a rough stretch here, down about 28% from those highs we saw at the beginning of March. This is probably a tougher gig than he thought it was going to be, just the brand cachet of Starbucks overall, but now you've just got declining sales. International sales are getting weaker. Nothing seems to be going right at this point.
Yeah, it really feels like Starbucks has kind of lost its soul. It used to be a place where people would enjoy meeting. They would, enjoy. They would really look forward to a trip to Starbucks, kind of hanging out, getting their drink of choice customized for them, and meeting friends or working on their laptop a little bit. And now it feels like, the 3D printed concrete Starbucks that they just announced kind of summarizes where Starbucks is now. And I think it's the result of some very tough competition that's come in, and you see them in every city. They're these very small, easy to manage, drive-through only coffee spots that are doing very well and doing big business. So I think they have this competitive, element to what's going on at Starbucks that wasn't there before. And we see it, app usage for Starbucks is down 20% year over year. And what we're showing right now on the screen is really the biggest, kind of competitive landscape thing. When Dutch Bros is up 28% in terms of brand awareness, and Starbucks is down the most on the list, it's just a complete reversal of where we were, a decade ago, where you couldn't, no one could compete with Starbucks. They were putting the mom and pop shops out of business. And now it looks like a lot of private equity firms and a lot of those mom and pop shops have figured out how to compete with Starbucks. And that's get back to accurate ordering, fast service, and in the case that you're going to have people in your store, it needs to be comfortable. People need access to the bathroom. It can't be a loitering spot, for people that are homeless or not, necessarily customers of the place. And so Starbucks faces some real challenges here. Like I said, to start this off, I think they've kind of lost their soul. What is this company? What is their mission? Who is their customer? And how are they going to service that customer in a way that brings back the cachet that they had 10, 15 years ago when they were, seemingly invincible?
Andy, I read an article a couple months ago, and this was referring to Nike. And they talked about these small, upcoming shoe companies as ankle biters. And the ankle biters were causing problems for Nike. And it seems like a similar problem for Starbucks. And, you don't want to be the one who invents the term death by 1,000 ankle bites, because a lot of these companies seem to be figuring things out. Now, there's also a lot of people that have faith in Brian Niccol to fix a broken company like he's done before with Taco Bell, like he's done with Chipotle. Now he's hopefully going to do that with Starbucks. But I can tell you, guys, with a 19-year-old college student, I see the credit card bills. They still like their Starbucks, those young kids. So I just had an intervention on the Starbucks bill on a credit card. So I think that Starbucks is still plenty popular, but they got to get China right. There's nothing they can do if China shuts down or this gets worse there. I think China's a big risk for a lot of American companies, frankly, but Starbucks is certainly one of them. Andy, your thoughts?
Yeah, no, I think you're definitely right. Look, Starbucks is still a great company, and they still have an extremely loyal fan base. Things have gotten more expensive, and competition has sprung up, literally around the block. If you drive through Louisville, Kentucky, within a quarter mile of every Starbucks is at least one of these what I call kind of micro coffee houses where it's drive-through only. Kind of reminds me of Rally's Burgers, if you're familiar with that. They got 2 lanes of drive-through, and there's always cars wrapped around the building for those. And so I think for people who just want their coffee, get their quick fix, and get on the road, Starbucks has probably lost some of those customers because the ordering process got extremely complicated. People that had the app kind of cut in line, or there's a lot of kind of qualitative statements out there that tell us that Starbucks has fumbled the bag a little bit in terms of the lead that they had. But you're right, this is a great company. They have a very loyal fan base. They just have to figure out how to expand that fan base. I think Brian Nichols probably, if anybody can do it, it's him. It's just the real question is, can anybody do it? And I think we're about to find out.
Yeah, he's trying to focus more on their coffee products, winning back customers,
Yep.
kind of taking, I guess there was thousands and thousands of different drinks that you could order based on all the ingredients they had.
Yeah.
But you look at app usage, and I'll use this a couple times a week, Andy, for Starbucks. I just don't use it as much as I used to, and I saw from your data here that that's been decreasing quite a bit. But I always walk it back to, hey, I can make it at my house, pretty decent coffee, but I just won't go as much just because they're so expensive. Like a latte is like $6-7 now. It's crazy.
Yeah, I think that pricing has really hurt Starbucks. If we look at the qualitative reasons that people give for using the Starbucks app less, going to the store less, most of the time it's either the price has gotten so high that they're looking for alternatives, which brewing at home is certainly an alternative. These micro coffee shops are certainly an alternative. They're cutting into Starbucks or ankle biting Starbucks. So it's either pricing or it's the in-store experience just getting really clustered and, really disheartening for a lot of people because they remember what Starbucks was like 10 or 15 years ago, which is kind of this cozy coffee house experience, this kind of Seattle coffee house experience where you could just settle in for a little while. And a lot of times in these Starbucks locations, it just simply doesn't feel like that anymore. And people lament that. So Starbucks has some challenges, some headwinds, still a great company. But, we think after this earnings report, we might get a little bit of a dip that if you're bullish on Starbucks long term because it is a great company. If you're bullish on Brian Nichols, I think you'll get better prices than you see today, probably in the next 3 to 6 months.
Yeah, that stock hit 117 at the beginning of March, now trading below $84 a share. So pretty steep sell-off. All right, great stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking it down for us. Kevin, when you look at this stock market